Hello and welcome to another update video about FET. We're taking a look at the FET long-term chart here today, and what we're tracking on this chart is a large A, B, C structure to the upside in the bullish scenario. This is definitely getting challenged, getting seriously challenged to be honest, because in this scenario we are now in the C wave. Yes, we completed waves 1, 2 and 3, but the waves 4 and 5 are still outstanding. The wave 4 has clearly not bottomed yet, at least there's no strong evidence for it, and it's already too deep to really be reliable, but still valid, okay? So it's not invalidated, that wide scenario, but we need some evidence that the fifth wave to the upside has started, and that is just... it's just too early to confirm that. There's just no evidence for it. This video is more about understanding or helping you to understand the larger degree structure. But I can tell you that there are two problems with the white scenario. The first one is the third wave was too short. So I've got guidelines I'm following in my work. And for example, the third wave should always reach the 138% Fibonacci extension. Well, it only reached the 123.6 extension. So we're not there yet, okay? And in addition to that, the fourth wave pullback is just too deep to be reliable. Normally we say even in a diagonal pattern, the fourth wave should not break below the 61.1 second. Hold on. Just gotta measure that. So yeah, normally we say even in a fourth wave in a diagonal pattern, the price should not break below the 61.8 retracement. That was at 53 cents, and that level is already broken. So because of that, I don't trust the white scenario. I still have it on the chart because it is not invalidated. When would it get invalidated? Well, it would get invalidated with a break below the wave 2 low at round about 16.8 cents. That's the low from August 2023. That's the formal invalidation point. Then it has to be removed from the chart. But technically speaking, it is valid. Okay? What sometimes happens in these diagonal patterns is that waves 1 and 4 overlap. And that's what we see right now. So it is still valid, but the bulls really need to turn up. And then if another high forms, I'm watching the area around $6.22 as a potential target. That also takes us to the yellow scenario, which is the more bearish scenario. In this scenario, the B wave never finished. So in the white scenario, wave B potentially bottomed in November 22. But in the yellow scenario, it's still unfolding. And the main reason why this is a plausible scenario is because B waves can overshoot. And this move up was too weak for a third wave. So it can be classed as a B wave, which is a 3-wave move. We're now moving down in 5 waves to complete the C wave. And then the market would then have another chance to recover from down there, maybe 10 cents, 7 cents, 3 cents. I know it sounds crazy, but then the market could make another attempt to rally from there. Now you might say, okay, you say it could be this, it could be that. Well, the main takeaway is the trend is still down. The white scenario cannot be trusted. It can make sense to wait for a first setup on the smaller time frame to suggest that the fifth wave is unfolding. But I wanted to take the opportunity to share with you the two scenarios on the larger time frame. And if we get some kind of a micro 5-wave move to the upside from the last lows, then it could be an indication the fifth wave to $6.22 has begun. If that's the case, you will hear it on this channel first. That's the update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.